Hi everyone, welcome to my YouTube channel. My name is Tabitha, Accounting and Finance Educational Hat. If you're new to this channel, welcome and please subscribe for more videos. Today we are going to talk about RIOcan. RIOcan is Retail Industrial Office. It is the largest REIT in Canada. So it's a real estate investment trust. They rent out properties to retailers and then collect rent and later on distribute the profit to their investors, those who have buy their stocks. So today I'm going to analyze and why you should really buy it or hold it or sell it. So stick around, and towards the end of the video we will really finalize what we really want to do with this stock. But let's get more into it. So the stock symbol is REI.UN in a Toronto Stocks Exchange. So if you want to buy, depending on the broker that you're using, you go on their search and you write in REI.UN and .UN and you will get the stock. You click on it and then buy it or you sell it if you already have them. So they have been valued at $13.2 billion as of 2018. So they are really they have that big market cap. So their stocks trend has been going up, and there was some up and down since we have had a lot of tsunamis like coronavirus. So now during coronavirus market crash, the price went down, and then now it's trying to recover to the normal price that it was. History, it was started like law in 1993, and they have achieved significant growth over the years. A lot of people have been investing in RIOcan. If you're talking about REIT, the first thing that comes into your mind is RIOcan, because they are the largest in this industry. As I have said before, the trend has been upward, and because of like some difficulties here and there, like things like coronavirus, we have seen some significant drop in their price, and it has been able to recover after a short period of time. Let's look at who are the RIOcan renters. So who are these people doing business with RIOcan, and why should you really trust buying RIOcan stocks? So if you look at the big retail, they are mostly dominated by RIOcan. So if you look at the mall, you go to Yorkdale. So those retailers that are in the mall are the renters for RIOcan. Things like BMO. If you see BMO, maybe in one of the plazas, maybe they are renting from RIOcan. If you look at the Costco, you look at Dollar Store, Good Life Fitness, LCBO, Loblaws, Marshalls, Metro, RBC, like all of the above. Like you can really see all these big retail companies, they are renting from RIOcan. Sometimes if you go to a plaza and then you look at the board and look down, you can see something that is written that is owned, managed by RIOcan. So we mean everything that is on that plaza is like Costco, Dollar Store, Good Life, Loblaws, all those retailers on that board, they are really renting from RIOcan, and that make it a big deal because we all need this brick and mortars stores for life, and unless now that it has been reduced, because some of them have been shut down and we don't know when they are opening. So maybe, God willing, coronavirus is going to go away and we'll go back to our normal stores. Some of them are still open, things like Walmart, not Walmart, Metro is open, shoppers open, the dollar store is open. So there's some of these retailers that are still open, and maybe that's why we're still having this stocks surviving the market. So their product and services, I've already said before, they like own properties that are mostly retail focused, and they have a lot of them. And it has been said it's like 233 properties all over Canada, and they also have development properties, so all over Canada too. So big residential area where they have places where people meet and they hang out. So those one too, they are owned by RIOcan. Let's look at the price. So if you're a short-term investor or a long-term investor, mostly it's very important for you to look at the price. Do you want to hold these stocks for like a year, and would you have some capital gained? So how do you look at it, and why should you buy it if you have that hope? So the current price of RIOcan is 17.7. So this is where it's sitting right now. But previous month it had gone into $11, $14, and it was recovering back to $17. So if you are a short-term investor who only need profit and not dividend, and you're hoping that the price will appreciate, will you buy it at 17.7? And how much will you gain? Is it 10% increase or 20% increase? So how do you look at that is by looking at what was the highest price in the last 52 weeks, and whether this price is moving. Moving would mean, like, is it fluctuating? If you log in today and you see 17.7, then maybe after a week it's still 17.7. It means like this stock is not moving. So maybe there is like some factors that is not making them move. So the highest was 27.82. So someone who is a short-term investor will think like this thing will increase to 27.8. They have a hope that they will get a 10% price appreciation, and they will get that profit. So they will just decide to buy it and then hold it and get that profit in the long run. The lower price, it has gone to 12.42 in the last 52 weeks. So if someone had buy some stocks when the price was 12.41, and they would have had now an increase of about 15%, because now it's standing at 17.7. So that is not lost, because you still have that like potential of it increasing to 27.8. So it's up to you and your money if you want to look at that. Do you want to make some chances of getting into 27.8 and get the profit, or do you want dividend? So it depends with you. So like I said before, if you look at the plaza, there are some plazas that have that logo that say RIOcan, and they're leasing. These are the properties, the retail that are leasing from RIOcan. So now what? So the dividend payout for RIOcan, it has been said like they are the leading dividend payers in the last few years that they have been in business. But what have happened during coronavirus is is what really keeps some of the investors backward, and they want to like look at the alternative instead of RIOcan. So most of the time they pay out 60% of the profit to investors. So and they leave the rest to reinvest in their business so they can keep growing. Until like 2018, since 2018 they have been paying 5.4% as a dividend to their investors annually. So that means if you invest 5,000, so you will get like 270 a year and 22.5 monthly. Yeah, for your information, RIOcan, they pay their dividend monthly. They pay their dividend monthly, so you get something every month if you have that 5,000 invested in RIOcan. So you get 22.5 every month. It's a very high yield because a lot of banks, they don't give you that money. So that risk that you're taking for putting your money into your RIOcan investment, it also pay back by that much, 22.5 a month. And if you keep it for a year, you have like 270 a year. So let's keep going and see what happened. But what is in the news? What really have changed? Due to coronavirus lockdown, and some of the retail close their doors, they are not into business, they are not paying rent, and this has affect the cash flow for RIOcan. And due to that, RIOcan has cut their dividend in the past few months by 33%. So we mean instead of you getting 12 cents, the previous thing that they were paying, now people are getting like 8 cents. And for people who are like invested to get dividend every month, this will actually really discourage them. And instead, for some investors, they end up like selling their stocks so they can go invest in other dividend stock that is paying more dividend, because yes, maybe they're doing the long-term game and they want to keep their stocks and keep earning that dividend. But since RIOcan reduce their dividend by 33%, it has made some of the investors to sell their stock and go and look for alternative dividend payers like smart centers, others like some other companies that pay dividend. So that was what has the negative side of RIOcan and what has happened in the last few months because of coronavirus. So for me, for me now, let's look. It's a good company, and if you are doing a long-term game and maybe and you need that dividend every month, you don't want it to be reduced, and maybe you can just hold the stock that you have and do not sell them at loss. Instead, maybe wait until like the price goes up, and then you can sell them and you can go buy other dividend stocks that pay, other companies that pay dividend. And if you are waiting for a price to increase to 27%, and then you hold it because there's probability that the price will keep moving to 27.8, and you will get that 10% increase appreciation in the price, and you make the profit and you walk away. So for me now, I'm waiting. If the price goes down, I'll buy more of the RIOcan, because I know if the vaccine is out, people are vaccinated, and everything goes back to normal, we'll go back to brick and mortars stores, and there's a probability that this stocks is going to keep moving, and we'll get more profit in the future and get that dividend, even if it's chopped off a bit, is no problem. for me, I'll buy more of RIOcan if it goes back to $12 or $15, something like that. Otherwise, hold for current price. If you want to sell, make sure you're not selling it at loss. Sell it with some little profit, so you can go buy more of those other stocks. And so this is the end of the video, and thank you for watching, and please subscribe, and see you next time.